Hello traders, this is Frank Paul, one of the mentors at forexmentor.com, speaking with you on Saturday, November 30th, although what we're going to do here is focus on a news event the day prior, that is Friday, November 29th, in particular Canadian gross domestic or GDP news. And what we'd like to do here is show you how the methodology that's explained in the Forex News Breakout Trading course and service really facilitated a long entry attempt here on the USD-CAD pair for a winning trade worth 50 pips. Now my intent with today's presentation is not to make it too lengthy or long-winded. I'm not going to go into great technical detail. I'd like to keep it fairly simple and concise, but to show you in a general way how our attention was drawn to the USD-CAD pair and how most particularly the point of difference that marks our service from other news trading methods is A, it's not indicator driven, it's pure price action driven. Support, resistance, market flow, continuation setups is what it's all about. And B, we don't use any indicators at all other than price. And C, we do not attempt to trade in a logical fashion, by which I mean if the news is good, we expect that the underlying currency must rally and vice versa. Often it happens that way, but I would contend just as often it does not. And today's example proves that point in spades. We had good news about the Canadian dollar, or I should say the Canadian economy rather, but that translated into a sell-off of the Canadian currency relative to the US. In other words, USD-CAD rallied. So this example is just one of numerous such examples you could find easily yourself where the reaction was opposite to what you might expect if the market were to react, quote unquote, logically every time, which it doesn't. So I'm going to first reference a continuation, an uptrend continuation pattern which was apparent on the USD-CAD, and at the risk of making things confusing and muddying the waters at all, which is not my intent, nevertheless I'm showing you this page from a daily update from one of our other services, FXM Trend Trader, and in that service we post a daily 14-page PDF market flow report which gives a short to medium term forecast, usually, occasionally longer term, but usually short to medium term, by which I mean 1 to 3 days, for 12 different currency pairs. And the point of doing that is to show you that this thing was posted on Thursday of this week. It was possible to anticipate ahead of time that the USD-CAD would rally because we had what we're calling an uptrend continuation pattern, which is delineated as a so-called impulse wave, an impulsive rally, a strong trending linear move, in this case from a swing point low at 105.31 on the hourly chart up to the B level, an interim high or top into a retracement at 106.03, which just happens to line up quite nicely, obviously with the round number handle at 106. And then we were seeing a lot of sort of choppy, anemic, sideways oriented action, which is just usually in this sort of situation aligned with the daily chart uptrend. It's telltale action that's corrective in function. Now this wasn't an easy correction at all. It was full of little twists and turns. But the point here is that we assess the setup by doing our homework. We recommend that you log on at least a half an hour ahead of time for any scheduled market moving news item, and you assess the corrective action. In other words, we're looking for a corrective bottom ending the pullback from 106.03 directly into news. And this is how we can make the statement, which a lot of people find really a bit of a head turner. It's a hard concept for a lot of people to wrap their minds around because it's so counterintuitive. But when you have a strong, clear technical setup that coincides timing-wise with news, that continuation setup virtually mandates the response to news, whether it's logical or not. And again, today's example is a perfect indication of that. Okay, in other words, can we see evidence of the corrective bottom forming ahead of news, which would fuel a rally, yes or no? And I'm going to try and reference that really quickly as we pull up the hourly chart. And what I've done here is I've again kept the original coordinates in place of that uptrend continuation pattern we just showed you, A at 105.31, B at 106.03. And so what we're doing heading into news, again about a half an hour ahead of time, was we're really looking closely to see whether is this still a setup, yes or no. Well, it sure looks that way to me. Impulse wave up, retracement sort of undulating, serpentine twists and turns, but still corrective action. Where might we expect it to run its course? Now, if you drill down lower from here to the 15-minute and even 5-minute charts, you can see that price had broken this corrective low I'm pointing to right here, a swing point low for 11 a.m. on the 28th at 105.71. Okay, so you're saying to yourself, even a few minutes ahead of time, say during the 15-minute bar leading into news, okay, this level's already been broken. So obviously that's not the support level I'm shooting for. What's the next likely scenario here? Where might this corrective pullback run its course? And, you know, if it just plunges a lot deeper, then the reality is we might have a 15 pip stop trigger. But we're never shooting for less than 3 to 1 reward to risk with this methodology. So if we're right 60 to 70% of the time, the winners pay for the losers and leave residual profit on the table. But I'm not going to pull up the 15-minute or 5-minute charts. I don't want to make this too tedious or technical, but I want to reference the fact that once this prior corrective low is broken, we're looking for the next available, again, 15 minutes or so ahead of news. I'm also going to leave off the chart here, daily pivots, but what it would show you if you plot them, and I'm using midnight to midnight GMT pivots, is we had the daily M1 pivot almost perfectly overlapping this 50% Fibonacci retracement at 105.67. The daily M1, that's the half pivot between S1 and S2. So we had a good little bit of confluence there. And from that perspective, that was a good place to go in, whether with a limit entry if possible, and in this case it was because after the 1:15 bar had closed, 1:15 p.m., there was a further short-lived little stab southwards of our target, which was good enough to trigger the long entry. There was about an 8-pip drawdown, which accounted for about half the available sort of breathing room here. We're putting a 15-pip stop on it. But all of that was good to take us into price. And so that's the entry at 105.67. Barring a more apparent support, or sorry, resistance target in this case, based on a higher level, technical picture, we are going to shoot for a 50 pip generic limit exit, and so that would have us out at 106.17. You can see that several hours later, before the high was put in on the 5 p.m. GMT bar, price achieved exactly that level. So within about 4 hours, 50 pips. Now on USDCAD, which is traditionally a slow-moving, fairly anemic pair, that's pretty good to pull 50 pips out in 4 hours. It doesn't usually move that quickly. And then price exceeded the target by about 12 pips. Interestingly enough, we can see how good this target, how well placed it was, because it was coming just below a round number level at 106.20 and just below the 27% Fibonacci extension of this ABC structure. Okay, the first available Fibonacci extension was just above our target. So it was conservative in that sense. We were looking to get out a little bit ahead of those confluence levels. And in hindsight, that wasn't a bad place at all, for a quick little in-out move. I believe the USDCAD is in a much longer-term uptrend, so you could certainly at least give it a shot with good justification to try and hold on as a position trade long. But we're not looking for position trades or even swing trades with this methodology. This is a short-term trading methodology designed to capture the bulk of a news breakout, and that's what happened here for USDCAD. One other thing I'd like to show you before we close for today is, how did we know that Canadian GDP news might be something worth watching for potentially a news breakout? Well, what we do here is we defer to the delineation offered up by one of the most popular news calendars with whom I have absolutely no affiliation whatsoever. I'm just saying this is what I use and I'm pretty happy with it. Other people use Forex Factory, which gives slightly different delineations. There are other resources as well, such as EconoDay, although not that I'm trying to critique them. The one problem I have with EconoDay is they are not generally as current with sort of impromptu news such as press conferences and the like, which can be updated on a daily basis. But anyway, I'm not trying to critique one or promote the other. I'm just saying for our service, we're deferring to this delineation. And what it showed us is that for Friday, November 29th, all of these news items listed being ones that fit into the high importance category, we don't use medium or low, Canadian GDP news was flagged as a high importance, i.e. potentially market moving news item. We capture those with a calendar that we produce also for our members. Here's the public page for our service, www.forexmentor.com/FX News Breakout, all one word, /index.php, or you can just go to the Forex Mentor homepage, and in the various course and service listings, you can find a jumping off point there. But if you log in to the members area, which it usually does more quickly. Oh, I was already logged in. That's the problem. Okay, sorry about that. Let me try again. I just made a mess of this. Okay, so now we're in the members area, and we have a weekly news calendar tab which you can click open, and you can see this is now the schedule for next week, Monday, December 2nd. Last week's schedule, which was this week's, showed also that for Friday, November 29th, 1:30 p.m. GMT, we had GDP news for USDCAD. So that tells us what to focus our attention on. And if you don't have a news filtering method or technique of some kind, treating news can quickly become extremely bewildering. You're just looking at way too much stuff, and the reality is about 20% of the news items generate 80% of the news response. So it's very important to have a focused approach and only look at the news events that are anticipated to make a difference. And only then would you even try to trade them based on our methodology if you have them corresponding with a clear technical setup. And in the case of USDCAD, we did. That clear technical setup mandated virtually a bullish response, even though news was good out of the Canadian economy today, which is just defies logic. Okay, but logic doesn't apply very often here, and that's a critically important point to keep in mind. In any event, I hope this quick overview of the USDCAD winning long trade on Canadian GDP news was helpful and useful. If you have any questions or comments on today's presentation, you can reach me via frank@forexmentor.com. Thanks for joining us. Enjoy your weekend, and I hope that we get the chance to speak to you again real soon. Bye for now.